Consider the following, and some of the results you will hardly believe.
Hey everyone, Remy Morvan here from Capital Homes Realty, and this is Real Talk Real Estate episode 1. And today we have Brent Mondoux. So we're pulling out the big guns today. Brent is a serial entrepreneur. He does a lot of public speaking. He's a celebrity in the business world here. And he is the CEO of Envision It Interactive, as well as the founding partner of Amplified Investments. So he's got a lot on his plate, a lot of knowledge. So thanks for coming, man.
Oh, my pleasure. Thanks for having me.
No problem. So Brent, just for people, I've known you for a few years now, but to give some context to everyone watching, what's your backstory? How did everything start?
So I started out right before Y2K. I started my own technology company, Envision It Interactive. Started with very little money, $200 each, me and Reed Ivins, my business partner. And we started out with nothing, started looking for contracts, and we knew what we were good at, design, development, and technology, and we moved into that very quickly. And technology's been my passion all my life, so I started out with technology. We've been doing that now for 16 years. And along the way, I got a number of passions about, fitness and real estate investing and stuff like that, but I never actually took action on the passion around real estate investing. I started reading books and courses. But I only started Amplified Investments a little less than 5 years ago.
How long has Envision It been in business?
16 years.
16 years.
Right.
Okay.
Yeah.
And Amplified?
A little under 5 years.
Almost under 5 years.
We're about to celebrate our 5th year.
Okay. So you're huge in the tech industry and in the community for business. When did the real estate investing start, and what was kind of the flip of the switch?
There were a number of catalysts. Some of them were personal and whatnot that helped me to flip the switch. I'd always been interested in looking for passive incomes where you're not trading time for money. And so I was always looking at opportunities there. And of course, stocks and real estate were two of the main ones that I looked at. Stocks is a lot easier to get into with smaller amounts. You could start for as little as $100. But optimally, I wanted to get into real estate because I saw the return potential and there's less volatility there as an opportunity. What got me to actually pull that switch was, so let me step back a second. I did about 9 years of real estate investment courses and books and stuff like that. And these weren't big, expensive courses. One of them was a couple $100 here, a couple $100 there. The books are, $20 to $50. But I never bought anything. Even though I had run Envision It probably for a little more than a decade at that point and been reading books for 9 years. It's the chicken shit. And the reason for it is because when you start your own business as an entrepreneur, you're hungry to start and you do really well and you take a lot of risks, and when you finally get some success and some sustainable cash flow, you recess again. Everyone as they age, the kid thing, you become less curious, less interested in risk and stuff like that. But when Aiden was born about more than 11 years ago, and he, as you know, the personal story, he was born dead and brought back to life, and that hemorrhage nearly died. I started to think more about, what if I did pass? Like, my time is traded for money with Envision It, my talent and my expertise there. It would continue, but the amount of money it would provide for the family was very, very limited. And it gave me a lot more of the courage I required to finally take that step. And one late summer in 2010, I was sitting in the backyard and first vacation in a number of years. And I was reading a real estate book and having a beer, and I said, that's it, you got to do something about this. You've been reading all this stuff but never pulling the damn trigger. So I said, that's it, I'm going to go buy something. So I put the book away and I started looking online, and I found a triplex that I still own today. Actually, I haven't sold any investments I bought to date. So the first place I bought, and I tried to psych myself out of that.
Did that first place, did you follow, I know, and we'll get into that in a bit, did your first property meet the criteria that you now so strictly follow? It did, so from day one? Okay.
Yeah. However, I still tried to psych myself out of buying it. When I went to the realtor, when I was making the offer, when the counter offer came in, when I was doing the negotiation, every step of the way I was trying to psych myself out of, this is not going to work, I must have missed something. But I had taken so many courses, like now hindsight's 2020, but
Yeah.
I realized I was overqualified at that point, almost to an extent. Like I was very, very qualified. I was taking very little risk, but I was still a chicken. But I finally did pull that trigger. And that was my first step into real estate investing.
So your first property in 2010,
Right.
and now we're not even in 2016 yet.
Right.
And you have how many doors?
I have 24.
24 doors in
Yeah.
that short amount of time.
I do, yeah.
Incredible. One of the things you nailed it, and is a lot of people want to, and they talk about it, and I'm in conversations on almost a daily basis of
Yeah.
people saying, oh, I want to get set up with this, and it's 2 years, 3 years later, they haven't even went to see a property, right? They're very interested. They're just scared. It's fear.
Yeah.
But I guess a lot of people have challenges. What do you find once you got over the fear? What were some of the challenges you had to overcome? Was it cash? Is it hard to get cash? Like, that's actually probably a really good question. A lot of people have is, Brent, if you have in 4 years,
Yeah.
or 5 years, you have over 25 doors. Where does the cash come from?
So the first property, which was $277,000, required about 20% down. Actually, it's not true. It required 35% down. It should have required 20%, but I was inexperienced in getting financing. And so I went to public banks and got the financing. The reality is it came from my home equity and a bit of savings. Anyone who owns a house for about 5 years will have enough capital or equity in their home that they can buy their first investment property. Now, everyone says, that's super risky. You shouldn't take the equity out of your house and buy a property. But you're not losing that equity. That equity is taken from your home, and you still have the equity in an investment home.
Putting
You
it in
still
another
have
home.
that equity. It's not gone. It's not lost forever. It's just equity in another different property that you just don't happen to reside in. It's really a mindset shift that's absolutely vital. And once you understand these things, it starts to break down those barriers of fear. Because it's not any different. You're not riskier. In fact, to the banks, to everyone else that you're looking for financing, you're actually lower risk at that point. It's crazy, but we don't understand it that way because as humans, we look for reasons to believe it can't be that easy. It's got to be that risky. I didn't do my own due diligence. This can't be. It can't be this good. And there's so many reasons we create these barriers for ourselves. We're people.
Yeah. And you have a partner, Reed.
Yep.
That's with you. Is
Right.
he with you on each property, on each deal?
He's with me on most of the
on most of
properties
them?
except one. I have a second single home.
Okay.
That I bought for a family member and they rent from me, but everything else
Every
it's
other
50-50
investment.
Reed and I, yeah.
Okay. So was that strategic to move faster, or what was the reason to bring in a partner? I find a lot of people they just say, well, I don't have enough money, or I don't have the guts to do it. And they oftentimes, when you speak to people in your network and people family members, they all want to do the same thing, but they might be missing that piece of the puzzle. Was Reed a missing piece, or was it just kind of just good timing?
Because Reed and I had worked together for 16 years and we have such a great relationship and our skills complement each other, I went to him as a friend and I said, I'm interested in this, are you? And he said, yes. Could I have done it alone? Absolutely. Is it strategic from a financial perspective? No, not really, because if you think about it, instead of owning 24 units, 50-50, now I would own 12 units, 100, 0. So the same thing happens there along the way. But does it have its benefits? If you find someone you can work with and trust and make sure that the relationship is going to, and your long-term goals are the same, so that one partner doesn't want to sell where the other wants to stay the same, there's really big benefits there. Say, for example, you want to take vacation. You don't have to worry. Say, for example, you're busy one evening and there's something that needs to be done. You're fine. Say you're out of town for a weekend on an outing and you need to manage something. You're still okay. So there are some benefits there that are really intangible, but there's some even bigger subtleties underneath. So an example of this would be, I'm not sure about my numbers. Can you look and make sure I didn't make a mistake? No, these look great. And so you go back and forth and you realize, oh, I was just trying to psych myself out, but they really are that good. So as a team, two people studying the data, you get more confidence together. And as you get more experience and as you get more knowledge, you can also see more opportunities. Like Reed can look at opportunities whereas I can't, or we can do analyses together.
Two different views on. So you're coming at it at a property potentially from two different angles, and
right. Or if I'm off for 2 weeks, Reed can do the analyses during that time frame and
something.
not miss a great opportunity to invest.
So back to the cash. Do you the more properties you accumulate, has it become easier to find the cash? And I imagine are you just systematically leveraging your older properties to purchase new ones, or are you still saving to this day a certain amount? Do you guys have a formula per se, a certain amount of savings compared to we're going to pull a certain amount of equity from this property that's really low? What's your down payment situation to purchase the next property?
Right. So there's some foundational elements that need to be respected when you're buying real estate. You want what's known as your loan to value ratio to stay low enough so banks or private lenders will still lend you. What that means is if you have $1 million net worth and you have $1 million debt, you're not going to be very attractive for people to lend money to. But if you have $1 million of net worth and you have $500,000 of debt, then the banks are going to be willing to lend to you because the risk is significantly lower. So that's one of the foundational elements. I'm just saying that to talk about the rest. So once you get a few properties, it becomes easier, but it's also a game of patience. If you invest in real estate and it's exciting, you're probably doing it wrong. You're more on the side of gambling, not investing. That's how I would classify it based upon my experience to date. And the reason for that is because you buy and you rest and you hold. And my strategy is different. There are like 5 or 10 different ways you can make money. Flipping, buy and hold, buy and sell for more, etc. I buy and hold.
Mm-hmm.
I buy cash flow generating properties and I hold. You make a lot of money when you buy, if you do it right.
Mm-hmm.
You buy properties that are worth $400,000 or $500,000 for, a little bit less. You immediately have some equity in there and whatnot. And you buy in neighborhoods that are either in high demand, have good jobs, access to public transit, etc. And the property will appreciate at a slightly higher average than other areas. And you buy in areas that are slightly higher end to avoid what's classified as 80% of the troubled tenants, the tenants that are going to give you a problem and stuff like that.
Well, a lot of people that look for investment properties, they're often afraid of the risk of price, so they're trying to purchase investment properties that are cheap.
Yep.
When you go cheap, you're gonna get problem tenants. You're gonna be in bad neighborhoods. The appreciation is not going to be as much. Is it scarier and riskier to go to a higher price point? It is, but oftentimes 90% of times it's the right move to make because you're going to have that much return and that much better tenants. You're able to charge that much more rent. So it goes within itself. You've touched on
But you said it's scarier and riskier. It's scarier and perceptively riskier.
Yes.
It is actually infinitely less risk.
Yes.
If you have a property and you assessed that it's going to generate you a positive cash flow of $5,000 on $30,000 in rental income, but you don't have $30,000 in rental income because it's vacant half the time or you have bad tenants, your entire cash flow analysis, you might as well throw it out the window. It doesn't mean a thing anyhow. Your actual analysis is completely fabricated. It's false. You've lied to yourself. And not intentionally. But you couldn't do an analysis on this property because you couldn't attract the right type of profile tenant. So you said it's scarier and riskier. It is scarier.
In perception,
It is not riskier whatsoever. Perceptively, it is.
Safer. It's more.
Yeah.
I find people, their knees start to shake once they hit a certain price point, even though they're willing to or they're able to finance
as do mine.
it.
We just bought a sixplex, and it was the biggest purchase we've ever done. Do my knees still shake? Oh, you bet they do. What do? I have to take a look and remind myself, investing in real estate must be unemotional. If the numbers work, and you can afford to do the down payments, put those fears aside, because guess what? 2 months after you've acquired that property, all of those jitters and fears
go away.
They just slip away, and you're like, why was I scared yet again? I already had.
And I wanted to ask you that. You answered it. How long after your first property did you say, you know what, I made the right move. Now I'm ready to go again. So 2 to 3 months after, when the bills start coming in and the rents start coming in, everything starts paying itself off, and then you're like, okay, I haven't had any problems. It's definitely, there's risk. There could be you talk about property management.
That's true for my present one.
You hire a property management company, right?
I do now, yeah.
You do now?
Until I had 8 doors, I did not.
Okay.
I wanted to learn the system and whatnot. Now, another thing you said there was 2 to 3 months, which is what I said for now, currently. But after the first one, it probably takes 6 months or more, because you got to make sure you've good tenants. they're paying. You've dotted your I's and crossed your T's. Your cash flow analysis was correct. And you've learned from it. And then you get the comfort to go again. That 6 month time frame starts to slowly decline over time. But generally speaking, my first one, 2 months after, I'm like, what did I do? I'm a landlord. This sucks. And then, of course, time goes on and you're like, wow, that was again fear talking. That was not me talking. That was actually just me afraid of the concept of being a landlord, because you hear all these disaster stories.
Yeah. You hear all the disaster, but you
damage.
don't hear of all, and the people kind of get they believe that the only people that are wealthy through real estate were wealthy before. It takes time, and it's they became wealthy because of it. Just like you were mentioning, you had almost no money when you started.
$200,
when you started. So you have a very strict criteria, which is when you're purchasing it. And if a property does not meet your criteria, you don't even look at it. And that's, you hit the other nail on the head, is don't get emotional when investing. And I find a lot of people get romantic, and they have a certain criteria, and then it starts going out the window because they really like a property. They're like, well, I won't make as much, but I really want this. I know you as a person, if it doesn't meet the criteria, you won't even come anywhere near it. So what's your criteria?
So my criteria is, first and foremost, it must cash flow. It must be in a neighborhood that is close to public service. Most people that are renting need public service. Not all, but most do. And not all the time, but many times they will still, whether it's their kids or their family members that they live with, etc. It must have at least one parking space for each tenant. Optimally, it'll have at least one guest spot for a larger multiplex, stuff like that. It has to have local services nearby, at least a restaurant and a convenience store of some sort. And it should be in an area that is growing in terms of employment. So if you see dramatic unemployment and whatnot, I would start looking for another geographical area and diversify my portfolio surrounding other geographical areas. But first and foremost, if it doesn't cash flow, I move along. And people say, I've seen it too. I actually just mentored a mutual friend of ours to buy their first investment property. And when we went through that process, we had closed with conditions on a property, the first property. And we went through this. And then once we did the inspection, they didn't like the inspection. They said, well, I said, no, there's no well. And they said, well, but it's not that bad. And I said, walk away. And then they thought about it for 2 days and called me back and asked me again, what would you do? I said, I told you I would walk away. It's a no-go. It's too much risk. You're bending and flexing, but we need it soon. I said, well, but you need a higher risk soon. And so one of the biggest lessons I'm teaching there is be unemotional in your rules, because that's when people come out of the woodwork and say, don't buy real estate, it doesn't work. Don't invest in this, it's too much risk. I have a friend who lost their shirt. Well, but you have to follow a foundational set of rules, and those rules that I just said have protected me very much from the acquisition perspective. I also have a whole set of rules around tenancy as well, which is a whole other course I've taken, and I strongly recommend any investor to take courses on real estate investing, but at least one on landlording, whether or not you're managing your own properties, because you need to be able to guide your property manager
the right way
as to which rules you wish to enforce.
Yeah. Okay. So what's the plan for Amplified Investments in 2016? What are you guys planning on growing? What is your, basically, in such a short period of time, you've gone to 24 doors. Right. What's the plan? Is it to have 100, or is it to kind of, where does it end and you go take 6 months in Jamaica and kick back?
Based on now, I don't actually need any more properties or any more money before to meet the criteria. I don't even need to sell anything or whatnot to meet the criteria to retire by the time I'm 41. I'm currently 37, so that would be 4 years. So I don't need
that. Pisses me off. I'm behind. I might not be behind. I'm a little younger than you, so I have time to potentially get to that same point. So, you know what, Brent? We're hitting the 20-minute mark. I want people to watch this, consume all of it. Brent is a very generous person. If people want to email you with questions, Brent, would they be able to? What's your email address?
My email address is Brent, BRENT, at amplifiedinvestments.com.
We will put it at the bottom of the video as well. So, thanks again for coming, Brent.
My pleasure.
I can see your passion for real estate investing and helping people. Brent talks a lot too. If you follow the Chamber of Commerce and you want to go, Brent speaks a lot. He's whether it's on real estate investing or just financial discipline. It's definitely someone you want to keep an eye on because he's a huge leader in the business community here in Ottawa. So that is episode 1. I thank you so much for watching, and most importantly, till next time, take care.